Good morning, Wall Street winners. It is Friday, September 27th, and let's take a look at what's happening in the pre-market. We've just had some information, some data come across the screen on Bloomberg. It was the U.S. August personal spending. It rose 0.2% month over month. It was estimated to go up 0.3%, so a little below the estimates, but really okay overall in terms of another data point to look at. What this is going to lead into is the jobs report next Friday and how it's going to affect the next rate cut, and particularly the size of that cut. If the economy continues to do well and not show signs of slowing, then it's probably going to be a 25 basis point cut versus 50. And if the economy is showing signs of slowing down, consumers are slowing on the spending side, then it might go to 50 points to try to spur that economy and get it moving in a more positive direction. That said, all three indices in the US right now are in the green, not a huge amount, but we've had a good week this week. The Chinese markets this week have been on fire based on the stimulus announcements out of China and the People's Bank of China. So that's been interesting. A lot of the Chinese ADRs traded on the NYSE have done very well. Alibaba is an example of that. But we're looking like we're probably going to have a pretty good day today, although it could be a bit of a muted session in terms of volume. If we turn our attention over to the Yahoo Finance app, what you'll notice is those three indices. These are yesterday's data, and then we've got crude oil. So crude is down below 68 a barrel. I think it's going to get above 68 today. It has to start coming back. Crude is at its lowest it's been in a very long time. It's just not it doesn't make sense for it to be at that price point with everything going on that is affecting oil right now in terms of conflict and wars and production and a number of other geopolitical factors. So I think that's going to start to turn. I think it's a good time to be in oil. It's also a great time to be in tech. I mean, if you're not in tech, you're missing out. Let's scroll down and take a look at what's in our list. So we had earnings come out yesterday from Costco at just after 4 o'clock after the close. Costco had, I think they missed on revenue, they beat on earnings, and they just missed slightly on revenue. Their future forecast was fine, but they're down a little bit pre-market. It's not a significant amount. It's probably, if we look at percentage terms, I think it's about 1%. Yeah, so it's about 0.93%. So they are off. I don't think it's anything to be concerned about. Costco, extremely strong. We may have seen a bit of a pullback in spending from the U.S. consumer. That's all going to turn around going into the holiday season. In-store sales or same-store sales grew a little less than that Wall Street analysts wanted, but it still exceeded what they were looking for in the quarter, and that's a positive sign from a retail perspective. We had Lulu. It had a good day yesterday. This is a stock that's been beaten up big time. Maybe now is the turning point and a time to get in for the holidays. Really depends on your perspective of whether people are going out and replacing their leisure wear or buying new leisure wear based on going back to work trends changing and evolving on a month-to-month, year-to-year basis, with more folks heading back into the office more frequently and probably not wearing leisure wear into the office as they were when they were working from home during COVID. Scrolling down through the rest of the list, Walmart dropped below 80, so it had an off day yesterday. I would expect it's going to come down a little bit more, so I would hold off on that. If I had a position, which I don't in Walmart, I would be looking to sell that right now and wait for a pullback. Nike has been on a nice positive upward trajectory. I expect this will continue into earnings. We've got earnings coming out next week from Nike, so we'll have to see what they report. And I'm not sure what to expect there. They've had a bad 2024. There's no question about it, and it's affected the stock. Whether they're at a point where that's going to turn around really remains to be seen here. Healthcare pretty much flat across the board. Transport not really of interest to me right now. Oil. So if we get down into oil, the oil refinery stocks had a good day yesterday, and most of them appear to be in the green today, despite crude being down. So again, crude prices, crude futures, they do affect these stocks, but not as directly as many people think. It does have a bearing on it. I think just on the flip side, interest rates and the 50-point rate cut has probably a bigger impact on these companies, knowing that rates are going down, because these are capital intensive companies. They need a lot of money to build the rigs and have the drilling equipment and all of the machinery in order to extract oil from the beautiful world we live in. So they are on an upward trajectory. I think we're going to see a bit of a recovery in oil into the fall. Might be a good time to be positioned in an oil stock and pick a favorite. I love Valero. I think Valero is a steal right now. Turning our attention to semis. So Micron is up again this morning. I expect Micron, like Oracle after it posted good results that were a surprise, I think it should continue an upward trajectory for the next couple of days. By the Tuesday of next week, it may pull back, depending overall what the overall NASDAQ and the market does. But I think Micron will continue to trend higher. So I'm a holder of Micron. I'm still holding it. I think it will continue to get back up into the 130, 140, maybe even 150 range by the end of this calendar year. So I'm holding that and looking for a return, a better return than what we've seen to date. We've got CRM. CRM had a positive day yesterday. It's up again today. Net had a positive day yesterday, which is Cloudflare. We scroll down, the QQQ, which is the Invesco ETF, is up almost 490. So again, if you're looking for an option other than individual stocks, but you'd like to see your money working for you, the QQQ is a really good bet to do that. Solid basket of tech stocks that you're no longer dependent on any one, because it holds so many within that basket of stocks. Microsoft hovering around that 430 range. You've got ARM. ARM had a bid from Intel to buy a component of or a piece of what it does, not looking to divest anything. ARM is super strong in terms of price, but price to earnings just blows my mind on this one. I can't believe there isn't a conversation around a 372 times price to earnings, but that's where we are with ARM. On Semi had a good day yesterday, up almost $4. It is trending upward with interest rates coming down and people more interested in new car purchases. That's going to help on Semi in the immediate future. AMD is on track. Yesterday was a phenomenal day, really, for semis across the board, but AMD up $5.50 to 167.50, call it. Looking like it's going to have another good day today. QCOM back up, so it fell down into the 160s yesterday. It's back up into the low 170s, around 172, 173. And then Lam Research, great day yesterday, up almost $44. Looks like it's going to be up again today. Again, this was a stock we were recommending when it dropped into the 700s. Really, even now into the 800s, it dropped further. It's now back. I think we're going to see this stock get back up into the $1,000 or $1,100 range by the end of the year, or maybe just into the new year when we have, first, I think it's definitely going to move upwards into the rest of the year when it has its Q3 earnings later this year in the fall. Oracle still continuing its uptrend. So I mentioned that when we talked about Micron earlier. I think it's a little on the pricey side right now, but a great company and lots of cash. We've got Tesla making some pretty aggressive moves. I mean, it dropped a little yesterday. It's recovered from that. But boy, this thing has just been on a rocket ship ride over the last couple months. If we look at the last 6 months, you can see the upward trajectory here back up into the mid 250s. So climbing steadily. Based on some positive production news and production numbers. Alibaba, again, this was a $80 stock, $78 stock just a month ago. It's now up to 105. It looks like it's going maybe to 107, maybe 110 today. So I think the Chinese stocks are an interesting opportunity to get in on, but be careful because there's been a lot of buzz and hype this week around the stimulus, and we've seen the jump. So next week, we could see them fall back a little bit. So just be cautious around these. It doesn't mean they're going to climb every day and consistently, but I believe that over the course of the next 3 months, if the stimulus works like it did in the US and other countries, then the consumers will come back online in China, and that will definitely drive BABA and other Chinese tech stocks higher. And then we've got the likes of NVIDIA. NVIDIA's been down this morning for the most part, but it's now up 23 cents. I can see this climbing back up into or past 130 and into the 145, 150 range by, call it, US Thanksgiving and after the election at the end of November. I still think Google or Alphabet is a fabulous stock. It is really undervalued and undersold in the market right now. Part of that Mag 7 stocks or Mag 5, however we're breaking it down these days, and again on an upward trajectory today. TSM has been doing well. At the same time, last of really the semis that we cover here, up at 186, almost 187. Looks like it's off a little pre-market. I expect that'll turn around. If NVIDIA is up and AMD are up and the other techs are up, I think TSM will be up as well. So the only red flag on TSM and NVIDIA and semis in general is a lot of them are manufactured in Taiwan. And if China does anything in terms of an invasion or increased control over Taiwan, then it is going to be a huge factor to the production of these chips and their availability globally. So that is definitely something to keep on the radar and be aware of. Now we get into financials. I think this is one of your safest bets going into early October, mid-October, when we start to get earnings out of the big banks. JP Morgan first to report. I think you're going to see some very positive earnings reports, good future guidance and forecast towards the end of the year and into 2025. And it's only going to help these stocks increase in value further. I'm a huge lover, of SoFi. I think in the $7 range it is, or $7.76. It's a steal. Looks like it's going to get up to $7.86, maybe $8 today. And then we scroll down. JP Morgan at under 210 is a deal, in my opinion. I would definitely be picking some of that up going into earnings. They've had a very strong year. I expect that'll continue. And then we have Morgan Stanley now up at 104, likely going to get up to, or 104 and a half. I think, as I said earlier last week, it's going to 106. If it gets there pre-earnings and has a good earnings announcement, then it could go to 110. But watch the lead up in these going into earnings starting, believe it, on October 10th. If they run up significantly, then they may not have as much of an upside surprise on good earnings, and they may in fact pull back if they've already run up prior to earnings. So don't miss the run up if that's the trend that's starting to occur. And it does look like we've had a pullback last week in financials, and it looks like it's starting to turn and they're starting to ramp up into earnings. So another good one, Goldman, looks like it's up almost $3 this morning, almost $6 yesterday. And then Charles Schwab up at almost 64, looks like it's up as well this morning. So that's where we are today. And if I were to pick a stock of the day, I would probably lean towards Goldman or Alphabet as my stock of the day for today's trading session. That said, if I were to buy pre-market, I would buy TSM pre-market and look for that pre-market downside of $1.88 to reverse and maybe end up $2 or $3 today. So that's where we are. Good luck in your trades. If you're liking these videos, please hit the like and subscribe button.